So what I'm saying is that all time frames matter when it comes to trading, no matter what the strategy is. You should look at all time frames to get an idea of which direction you should be trading. You should look at all the time frames to get an idea of what the market is doing, what the market is telling you. It just makes trading a whole lot easier when you look at all time frames, especially the larger time frames. So in this video, we want to key on the monthly time frame. We want to talk about, what the monthly candles represent and what can be depicted from the monthly charts in the way that it's moving. Okay, so you first of all, you have to recognize is that when you're looking at the monthly time frame, like this is for Forex beginners. When you're looking at the monthly time frame, you have to know that each candle represents 1 month of price data. Okay, so because this is a blue candle, that simply means that for the month of July, so far we're in a buyer's market, or what some would say a bullish market. Okay, so if each candle represents 1 month of data, then you see the market was going up. It's been going up so far for the month of July. It went up in June, it went up in May, and it started its trend to the upside around April, right? So this is the AUD USD. So the AUD is the base pair, right? The USD is the quote pair. And basically what this chart is saying is that the Australian dollar for the month of July is stronger than the US dollar. So when you're referring to, when you're on a chart and you're looking at the, which currency pair it is, always remember the AUD, the first currency is what we refer to as the base currency, and the second currency in the pair is the quote currency. And it's simply saying that comparing the AUD to the USD, and then you go down to whatever the chart is saying, is that the Australian dollar for the month of July is stronger than the US dollar. Okay. Now, so what can we take away from looking at this chart? Well, it simply tells me that if the AUD was stronger than the US dollar in June, then I would have had a good idea that I should be buying this pair in July, because until we get to a level of support and resistance, or until we get to a level where price may reverse, we should expect this pair to continue in an uptrend back to this level where price may reverse, or there could be a level right here. There could be a level right here. As a matter of fact, this should be a level right here of resistance, right? But price may go through this level. Just because it's a level of resistance doesn't mean price is going to just simply, reverse at the level. It could reverse at the level, or it could go straight through the level. But let's say if I was in a buy position since May, then I know once I, get up into this area, I should be really looking at, what price is doing to give me an indication of whether or not I want to come out of my trades, or if I want to stay in the position, right? So all in all, the monthly time frame gives you a good idea of what the price is doing long term. And when we're trading the new level strategy, we always, we want to look at the monthly time frame just to do that, just to get an idea of which way we should be trading. Because what you want to happen is that you want price to line up. You want the monthly, the weekly, the daily, the 4-hour time frame. You want it to all line up. That's how you have the most optimum trade possible if price is trading in that direction on every time frame. Okay. All right. So on the monthly chart, we look for long-term movement. Another way that you can trade the monthly time frame, if you were what we call a position trader. So let's say if you're in this trade right here, right? Let's say this was 2018 right here, and you were looking to go short on the AUD USD because the USD was kicking its butt so far for the year. Then you would take a short position and you would just ride it out for 6 months to a year, or even longer, knowing that this price eventually is going to fall short based on what the technicals were telling you on the chart. So, in terms of just strictly trading from the monthly time frame, it's usually traded from position traders, like huge hedge funds. They use time frames like the monthly to take positions because they're in the position for a very long time, for months or even years, to make the profits from where they feel the market is going. These trades are very high probability trades once you get the proper setup. And as you can tell, the market just flows. It just flows. When you get a setup, on the monthly time frame, they're high probability because the market just flows. It tells true direction in the market, right? So analyzing the monthly time frame is really important. It gives you a general idea of where the market is going. You want to go in and put in your support and resistance levels, of course, so you can kind of narrow down on what you should be looking for in the market, no matter if you're trading Forex, no matter if you're trading stocks, bonds, any type of security, commodities, options, any type of asset that you want to trade. The monthly time frame is used to look for long-term movement in the charts. Alrighty guys, that is the monthly time frame.